Okay, this is it. Musishe, this is the mute.
Hello, can anybody hear me?
Yes.
Okay. It's 2 minutes to 3. Once it's 3 o'clock, we'll start. Meanwhile, let me reach. My mom said you need your mom's number.
I'll give you the number I sent to her.
Okay, what's your time? Okay, now I'll watch.
I left my phone here. We watched the Send me my watch.
Bring your watch.
Some
But don't bring your watch. I want to start where you said.
Actually,
Bring it.
well, wait.
Hmm?
I don't want to be late now.
Okay. Good. Everybody once again clock. So we're going to start. We begin our training and we went up to set up our customer. We rounded off at the point where we're trying to add our products and services. So we'll continue from that point today. Can someone confirm that they can hear me?
Yes, I can hear you.
Okay, great. So today we are going to start by looking at how to add products and services. So this is also where we ended yesterday. So we're looking at different types of products and services. We'll look at how to add products and services manually, and equally how to import your product and service list. So to my next slide. So we'll talk about different products and services on QuickBooks. There are different options or lists when they use the word products and services. We have inventory, non-inventory, and service and a bundle. So let me explain each of them one after the other. So an inventory is there are products you buy and sell and that you need to track the quantities. So when we are creating products, which I will show us how to do, you are selecting, you are going for the option inventory. It means you are talking about the product that you buy and sell, and you want to keep track of quantity on hand at any point in time. Now we'll talk of non-inventory. There are products you buy and or sell, but you don't need to track it. For instance, a company that's into repair of vehicles, right? If you buy bolts and nuts to install on a machine, those are items you use in performing your service. They are not actually inventory items. You might not need to keep track of them. Now we'll talk of the next one is service. So services represents intangible things you rent, intangible. I don't want to use the word services. When you render, you provide a service to someone, right? Such as when you are doing landscaping. Let me give an example: landscaping, auditing. Those are services. So if you are into, let's say, consulting, you want to set up your different services, your auditing services, your CAC services, your insurance services, you set them all as a service. So when we refer to service, we refer to intangible products that things you can't touch, but you render to people in exchange for money. Now, a bundle, when you're creating a product and you select a bundle is simply a collection of products and or services that you sell together, right? Let's say you are selling cheese, you are selling wine, and you are selling fruits, and you are selling a basket, and you decide to sell a basket that contains fruits, cheese, and wine together. That's a bundle, right? It's a bundle is a combination of different items put together, sold as one piece. Sold as one piece. Now, let me switch to my software and show us how to set up products and services. So to my software, okay. Before I go to my software, let me share my Excel file first. So this is my Excel file. Let me share. So this is my Excel file here. So this company, like we said, Bright Star Electronics, it sells different products. So this is just a list of their inventory, the things they sell. Your list might be longer than this, but this is just for demonstration and illustration purpose. So you see this list have the name of the item first. What type of product and services is the next column? What is the sales price per unit? What is the cost price per unit? What is the quantity on hand? And what is the date as at the last day of the last financial year? Remember yesterday I was telling us that when you are using QuickBooks for a particular financial year, for all your assets, equity, and liability items, you need to bring their balances. So we are keeping track of transactions for this company that happened in 2025 from 1st of January. So 1st of January 2025 to 31st December 2025 is our accounting year. What it means is for all our balance sheet items, the assets, the liabilities, and the equity items, we need to get their closing balances as at 31st of December 2024. Same inventory is part of assets. So that's why you see this inventory as on the date section, you are seeing 31st of December 2024. So what I'm going to do is we need to set up this inventory list. This is our inventory list. The first thing they sell is HP laptop. And this is the sales price per unit. And they have 30 of it on hand. They sell phone chargers too. A unit of phone charger goes for 5,000. The cost price is this, and they have 15 on hand. Then they render other services, laptop repair service. So this is a service. So per laptop they repair, they charge 20,000, and this cost should be let me put 15,000 per laptop they repair. They charge 20,000. Sometimes for some services, the cost might be zero, might not be included, but let's leave the sales price at 20 and the cost price at 15. Now, how do we set up this inventory list on our software? Let me switch to my software. So on my software, I told us that to set up our inventory, by the right side, where you have this menu by your right side, you go to where it is written all apps, and you go to customers. No, you go to sales and get paid. Then you go to product and services. That's one method. The second method is just come directly on your home screen now. Click on sales and get paid. It will then from there you can choose. Let me close this. From there you can choose products and services here, right? Products and services. Now, let me give it a minute or so to load. So now this is displaying a page, say get started with products and services. Now, like I said in my slide, there are two ways of creating our items, right? Or our products and services. We can do it manually, creating them one after the other, or we can import the items together. So what I'm going to do is, the inventory list in Excel I just displayed some moments ago, I'm going to create the first item manually. Then I'll show us how to import the others. So to create items, once you open products and services, click on create items. The first thing they'll ask you on the basic information is the name of the item. So I'm going to be picking it from my Excel file. I'll pick it from my Excel file. So the first is HP laptop. I'll just copy the name, come to my the field for name and enter it. Now, if you have an image of that product, a picture of that laptop, you can just click add here. It will redirect you to where you have the image. Then you can now have it displayed here. Now, item type, right? This is what we spoke about. So a laptop is a physical product, something you can touch. So it is not a service, it's an inventory item. Remember, we said inventory items are items you buy to sell, right? So this is an inventory item. So it's not a service, it's not a bundle. Now, SKU stands for store keeping units. So store keeping units refer to things like if you sell this product or keep them in store, let's say in cartons, in cages, whatever, you just enter it here, but I'll leave it blank. But this is just to explain what it means. Then category. Now, let me paint an example. This company sells laptops and it sells chargers. So you can create categories of product. You can say phone accessories. So phone, when you talk of phones, there are different kinds of phones, HP, Dell. So phone is a category. HP laptop is a particular specification under types of phones. Then when you talk about chargers, now you can say computer accessories. You have things like USB drive. So category means which category does this particular item fall under. So if I create two categories here, right, I could say phone accessories and laptop. So I know HP laptop is a specific brand of laptop. So if I come to category, I'll select computers and accessories. That's just an example, but I'll not bother myself with that. Now I'll go to inventory information. What quantity do you have on hand? We saw that in our Excel file. Let me just quickly flip and check. So for that particular product, we have 30 units on hand, 30. So I'll enter 30 on my quantity on hand. Then where I have the field for as of date, remember the last day of the last financial year. So the date format is you start with the day, the month, followed by the year. So it's going to be 31st/12/2024, right? Then reorder point. So I was explaining reorder point yesterday before we end. So reorder point is saying that to what level are you going to have your quantity for this particular product before you can order more. So if we say our reorder point is 20, it means as we sell and buy this product, once the quantity on hand gets to 20, there should be a restock. We should order for more. So that's what is referred to as the reorder point. So reorder point, we'll keep our reorder point at 20. Then the inventory asset account. So this is saying that which account in your charts of account will tracking the value of your inventory. So like I said yesterday, QuickBooks gives us default accounts. So we can see two accounts here, inventory and inventory asset. Whichever one you use, just maintain it throughout creating all other products. I'll select inventory. I'll scroll down. Now under sales description. Now what we are to enter here is we'll just repeat the name of the product. Why? So that whenever we raise an invoice, the name of the product should appear as HP laptop. Now the price/rate. So the price/rate is the price you sell a unit of that laptop, the selling price per unit. And for my Excel, the selling price per unit goes for 600,000. So I'll enter 600,000 there, here. 600,000 here. Then income account. So the income account is saying that what account in our charts of account tracks sales of that product. So we have sales of products. Let's add a new account. We have an account in our chart of account. Remember, in this our chart of account we were working on yesterday. This chart of account here. This is our chart of account. Remember, sales revenue is 4,001. So I'm going to enter it. So let me close this. If I click on here, I'll click on add new, right? So enter account name or enter sales revenue. Sales revenue. Then account number. Remember, account number is 40001. Then account type. So this is an income account. So select income. Detail type, we'll just select it as revenue general. So
Sorry to
description.
interrupt. Please, we can't see your
Okay.
screen.
Oh, okay. Oh, sorry. So I was saying, okay, let me go back. Let me go some step back. So at this point where you're asking you to, we're trying to create the product manually. We've entered the other details. We got to this point where they say sales description. You enter the name of the product. Now the price/rates. We're entering the price per unit of that laptop. Now, this is the point I was at where you said you're not seeing my screen. Income account is saying which account in your chart of account tracks the sale of this product. So I was saying in my chart of account, let me switch to my Excel. I was saying in my Excel file, in our Excel chart of account we're looking at yesterday, this Excel file, the chart of account. Remember, see our sales revenue. He has an account number of 40001. So we need to create this account, sales revenue. So if I come here, I'll click on add new. So you bring out this form. Remember this form, this window, when we were creating our charts of account yesterday for our bank, our assets, and our petty cash and all. So I'll put here sales revenue, then account number. I'll put their number here, 40001. Then the account type. Oh, the account type. So you are seeing my screen now, right? Let me go back again. So if I select here, add new, account number, account name is sales revenue. Sales revenue, account number 40001. So account type is income, and the detail type is, let's put sales general. Then description, enter whatever I want on the description and click on, oh, I've created this sales revenue twice. Let me close. I've created it already. So it should be showing me here. Let me see. Like I've created it twice. Let me see something. Sales revenue 40001. Income revenue general. Okay, it's existing already. Let me select. Let me come here. Okay, let me just leave it as sales of product income. We can always change this later. Let's leave it as sales of product income. Click on save and close. Let me see what it's showing me. So we've created our first product, which is the HP laptop. This is what you are seeing here. Now, I told us that apart from creating it manually, you can equally import the others. Somebody said it's lost. So what's the question? Abiodun, you say you're lost. What's the question? Can you hear me? Hello, can you hear me? Can anybody hear me?
Yes, I
I
can.
can hear you, sir.
Okay, so we've created the first product. We want to create the others. So if I come back to my Excel sheet now, what I will do is I want to remove this first one I've created and import this remaining two. But so what I will do is I'll copy this whole table so that I'll keep this sheet. I'll copy this, open a blank so that I keep this one as my master copy. Go to a blank Excel sheet and paste. Sorry, I'm coming. Okay, you're not seeing my screen. Let me. Okay, you're seeing. Okay, so I've pasted it on a new Excel sheet. Now, what I want to do now is I want to now remove, how many sheets do I have here? So I want to now remove this first one. This first one I've created manually. I want to remove it. I want to remove it. So I have these two now. I can save. I can save it. Right? I can save it. I'll give it a name. I'll call it, let me not save it. Let me save it. File, save as. I want to save it as inventory list. Inventory list for import. Right? Like this. I'll save it. Now, back to my software. Back to my software. Now, how do we import the remaining products? If you scroll to the top, you see where it is written new product / service. Okay, we omitted something. I'll come back to the first product we created. We omitted something. Now, this new product / service, if I click on this drop down arrow, now they're asking me, I want to import some items. Let me go to, let me see. Okay, let me see, batch import. Let me go to batch import. So I'll select batch import. I'll click on let's go. Okay, so let me see something. Okay, check. Sales description, price, income account, purchase, import from file. Okay, so this is the template I'll need to follow to be able to import, into X, to be able to import it into the software. So I'll click on import from file. I'll look for where that file is. So I'll browse where my file is. This is where my file is. I'll click on open. Right? So I haven't done that. I'll click on next. So it is reviewing columns. So what it's doing at the back end is doing what we call mapping. It's trying to map the products. So it has done mapping. So products / service, it has mapped it to item name, category. We don't have any category, item type, SKU, sales description. Okay, so what I want to do now is, let me close this. Let me go back 2 steps. Okay, so what I want to do is, let me see, from here, bundle. Okay, let me go back to batch import. So what I want to do at this point is, now let me see if they have a template. Select entity, check this box, scroll to the bottom. Okay. So what I want to do to make it faster for me is I'll take note of this template that is being displayed here and ensure that I have the same template format as my Excel sheet. Let my Excel sheet read these column names. So I'll quickly do this at the background. So on my Excel sheet, maybe I'll share with you. So instead of having item name, I'll call it product / service. Instead of having item name here, I'll call the column name product / service. Then instead of type, I'll call it item type. Instead of just the word type, I'll call it item type. Now, instead of sales price, let me follow the name they have here. I'll call it sales price / rate. Sales price / rate. Okay, I'll put the sales / rate. Then instead of cost, I'll relabel this purchase cost. Right? Purchase cost. Then I'll add 2 more columns. I'll add a column for sales description. I'll add a column for sales description. I'll equally add a column for purchase description. purchase description, right? So in the purchase description, I'll just simply repeat the name of each product. I'll repeat the name of each product. Right? So what next do I have on that template? I have expense account, quantity on hand, quantity as of date. So expense account. So I'll create a column for expense account. Expense account. Then I'll equally create a column for what else do we have? Reorder points, not necessary. Inventory account, inventory asset account. So I'll create a column for inventory asset account. Inventory assets account. So under inventory asset account, I'll just put inventory. Inventory. I'll put inventory here. Now, expense account, I'll select cost of sales. And here, cost of sales. Okay, now as of dates, okay, date. So now I'll save my file. Now let me go back and begin the import. So I'll click on import file, select browse, and I'll look for where my file is. Click on open. I'll click on next. Okay, so I have, so this category, I don't want, so this is mapping now. I talked about mapping the other time. So mapping simply means the QuickBooks is running through your Excel file and looking at the headings or the columns you have in your Excel file with regards to your inventory list and trying to map them with the required fields that are necessary for creating an inventory item. So it has done the mapping. It has done the mapping here, right? So the dates. Okay, let me see the format of my date. Okay, let's try. If we have an error, we will notify if it can be imported or not. So I'll click on next. Okay, so you can see. Who's that? So you can see the items are now shown here, right? So let's see.
Please, you're not seeing your screen.
Okay. Okay, can you see my screen now? Can you see my screen now?
Excuse me, my own is showing blank. Although I'm hearing what you're saying, but it's showing blank.
Okay, let me
go blank.
Okay, hold on, just hold on. Meanwhile, let me switch back to my Excel file. Maybe I'll take it off from there. So this is my Excel file. What I did was, this was not the original nature of my Excel file. I have edited my Excel file. What did I edit? I ensured that I have headings. All these headings you see here, they correspond with the required headings that are needed in the form for inventory if I want to import. That was what I did at the background, right? So now if I want to, let me redo the importation process. So let me close this. So what I'm saying is we have created the first inventory item. We want to import the remaining two, right? So for me to do that now, let me give it some time to load. Now, you can see my QuickBooks screen, right? Can you see my QuickBooks screen?
Yes, I can see
Can you
from
see my
here.
QuickBooks screen?
Yes.
Okay, so I want to import the remaining. Remember, we've created one item. I want to import the rest now, right? This is the HP laptop we created and all. I want to import the remaining two. So I'll come to this place where it's written new product/service. I'll click on this drop-down arrow and select batch imports. I'll select batch imports. Now, do you want to restore from the last? No, discard. Let me start from. So I want to import that Excel file that has the two remaining items. So I'll click on import from file. Now it will walk me through the process of importing that file into my inventory list. So the first thing is to select where my Excel file is located. So I'll click on this browse button. So I have my Excel file titled inventory for import, right? I'll click on this. Inventory for import, I click on open. Now it's going to browse, and if I click on next, it's now going to do what we call mapping. And I'll say mapping simply means that it will go through, it will scan through your Excel file. Look at the column headings you have in your inventory list. Try to match them with the appropriate column headings that should be in QuickBooks. So in QuickBooks, there's a column for price/service. So it has gone through my Excel file and see that there's a column for product/service. I beg your pardon. It has mapped them. QuickBooks has a column for category. However, my Excel file does not have a provision for category. So I'm going to select not applicable. NA means not applicable. There's a field for item type on the QuickBooks field for filling inventory item. I equally have a column where I specify item type on my Excel. So it has gone through like this. I don't have SKU, so I'll put not applicable, right? Remember, these are all the fields that you need to fill when you are manually creating an inventory on this or the software. So it is checking, do we have this field on my Excel sheet? Anyone I don't have, I will select not applicable, right? Not applicable. Income account. I'm supposed to have an income account. Let me select, I don't have income account in my Excel sheet. Let me quickly go back and edit my Excel sheet. I need to include an income account. So I'll include income account here. And I'll call this account, this is sales revenue. Sales revenue. Sales revenue. Right, I will save my file and I'll go and start back from step 1 because I have edited this file. It is not the same again. It is not the same. So this is what I've just done. This is what I did. I added a column for, this column was not existing. I just added it now, income account. Then I'll now save, go back to my software, and now redo the step again, start the step again from square 1. Because my Excel file has been updated, it will not give me the same result. So when it takes me back to my product page, I'll come here, new product/service. Click on this drop-down arrow, select batch imports. So when it brings batch imports now, I'll click on import from file. Then I'll now browse where my file is located. Browse, look for your file, select it, and it's going to display here. Now scroll down and click on next. So this is where the mapping is being done. So like I was saying, it is going through your fields in your Excel and checking the required fields on QuickBooks and doing the mapping. So we can see product/service on QuickBooks field and on my Excel. So this is fine. Now category, I don't have category on my Excel file. So I'll click not applicable because I don't have a column in my Excel file called category. There's a field for item type when you are creating a product. So I equally have a column titled item type. SKU is not applicable. Sales description, I have it. Sales price/rate, I have it. Income account, I have it. Now purchase description, I have it. Purchase cost, I have it. Expense account is on my Excel file. Quantity on hand, I have quantity on hand. Quantity as of date, mine is just date. So I can leave this mapping the way it is. Reorder points not applicable. Inventory asset account. Let me select inventory. Okay, inventory asset account is fine. I'll click on next. Now, the 2 products are ready to be imported. Now, if I scroll and scroll, I come here. So I can see some things are missing. Okay, this is fine. This is fine. So I'll click on save. If there's an error, it will tell me there's an error. If there's no error, it will import it automatically. I can see 2 saved, 0 failed. Let me click on this, close. So it has done. So let's check our product list now and see if our 3 products are on the software. So you take me back to my products and services. If I scroll down, you will see the HP laptop, the laptop repair service, phone charger. Now, we omitted one thing when we're creating the HP laptop manually. You can see QuickBooks has notified us here. The initial cost of one item is missing, and that was our laptop. So how do we edit an item you have created manually and you want to make some edits on it? So what you do is, at the end of the details of the product, you see a button titled Edit. If you click on Edit, it will redisplay the form. To redisplay the form and ask you look for where you want to edit. What we omitted was the cost per unit of that product. So the cost, if I come to first of all, let me put my purchase description, HP laptop. Now the purchase cost. I'm coming to Mr. Johnson. I've seen your hand raised. I'm coming. Let me quickly save this. The purchase cost for the laptop is how much? Of the laptop is, let me see. Okay, 520,000, 520,000, and you click on save. Okay, so let me entertain the question. Mr. Johnson, please, you can unmute your mic and ask your question.
So my question is this: what if you
Yes.
don't want to go through these Excel processes, like setting up the account type and every other thing? Or if you want to go directly from the Sage, like setting up the chart of account from Sage, is it still possible that way?
From what? From Sage?
Yes. Sorry, from QuickBooks, I mean.
Yes, that would mean doing it manually.
Okay. So what is now the difference between doing it in Excel, importing to QuickBooks,
Okay, let
and
me
then
explain.
setting it up directly from QuickBooks?
Okay, let me explain. Please, everybody, mute your mic. Mr. Emmanuel Teso, mute your mic, please. Okay, let me explain. Oh dear. Mr. Emmanuel, now let me explain. Now, assuming you have an inventory list of 100 items. Can you hear me? Can you hear me, Mr. Johnson? You have an inventory. You have an inventory list of 500 items, and you want to bring them into QuickBooks. What's this thing showing me like this? You want to bring them into QuickBooks, right?
Yes.
And there are two methods. Either you do the manual method of manually entering each product on the system. What do I mean by manual? You open the product form, you type in the name, type in the cost price, type in the sales price, type in the quantity on hand, type in the balance on hand, and you do that for all the 100. Now that is time consuming. The method I show you in Excel is, if you don't want to go through the stress of typing it one after the other until you get to the 100th product, you can import into Excel. That's the purpose of me showing you that Excel stuff. Remember, I started by creating the first item. We did the first item manually. I now did the 2. I did that 2 just to show you in a case where the remaining items are like 100 or 200. You take almost the whole day entering them manually. So that's why I showed you what I showed you in Excel. I don't know if that makes sense.
All right, I can understand that. Yeah, what was setting up the chart of account?
Same for chart of account. 2 steps too. You can manually enter them. I did that yesterday in our class. I showed us how to do that manually in our class yesterday. But you can do the same thing too. Either you enter it manually or you do it, you import it. But import, the method of importing is always the best if you have a huge list. Your chart of account list is huge, and your inventory list is huge, or your suppliers list is huge. Then it is best you go for the method of importing. That was why I just showed what I did on my screen.
All right.
Okay, so I saw another hand. Someone's hand was raised. Did I see another hand? I saw two hands. There was somebody's hand.
Okay, it's my hand, but it's the same question I wanted to ask. You have answered it. If you are working with a large number on your inventory. So that was what I wanted to ask, but you have answered it. Thank you.
Okay, great. So now we have our inventory list. Now let's move on to how to record transactions. So let me share an Excel file I have with you. I'll drop it on the group same, but let me share the file first. Let me share the file and walk you through the file. So there's this Excel file I have on my screen here. Let me share my Excel screen.
So I have a complaint, please.
Who is that? Yes. Go ahead.
My system screen is blank. I can't see anything, but I can hear you.
Who else can see and hear me? Can anybody see?
I can see the screen as well here.
Yes, sir.
I can see the screen. I can hear you at the same time.
You are sharing an Excel file.
Okay, great. It means something is wrong with your network, Mr. I don't know if that Mr. Johnson or so. Maybe something is wrong with your network.
Emmanuel, I can view it on my phone, but then on my system where the screen is wider, I can only hear you.
Okay, so I won't don't bother much. Just follow as you can. The recordings will be shared. Don't worry.
It's
now,
all right,
please, Mr. King Olga Roslyn, please help me mute your mic. When it is time, yes, thank you. Help me mute your mic, please. Roslyn, Olga, help me mute your mic so that I don't get distractions from the background. Thank you. So now you can see my Excel screen. We are going to something very important, which is the recording of transactions. So I have an Excel file, which I will definitely share on the group. And in this Excel file, it's made up of different sheets. The first sheet is what we are looking at. This first sheet is where we record transactions that have to do with customers. The second sheet is where we record transactions that have to do with vendors or usually called suppliers. The next sheet is where we record other expenses, like you make operating expenses like payment of rent, utility bill. How do you record those things on QuickBooks? Then we equally look at how to do transfer. Let's say money was transferred from one bank to the other. Now, let's begin with customer transactions. But before that, let me share my slide and do some basic explanation. Let me go to my PowerPoint. So on my PowerPoint, we have the sales process. I want to talk about the sales process because we'll be raising some documents and I need us to understand. Now, in your transaction with a customer, there are different documents that are initiated from the point from the beginning to where a sales is being made. Now, this is what I refer to as the sales process. In the process of making a sale, there are some certain documents you raise in the process of making a sale. Now, I'm going to explain them in the right order. However, some organizations don't follow the order. They might skip a particular one and go to the other one, but I'll just explain the appropriate order as they are on QuickBooks. So we're looking at the sales process, and there are 3 different documents that are normally raised when you are about to make a sale. The first is on QuickBooks right now. Now, the first is an estimate. Now, an estimate is simply a document that allows a potential customer or a buyer to view the costs involved in purchasing a specific product or service, right? It is not a must for you to start your sales process by raising an estimate. It is purely optional, and it does not affect your general ledger, right? It doesn't affect your general ledger. So when a customer wants to buy a product, the usual first process, the customer will ask you, please give me a quote for buying. Can I know what? Give me a quote for buying 10 laptops, or an estimate for buying 10 laptops. He or she is just saying is, can I know what it cost me to buy 10 laptops? You prepare a document called an estimate mentioning the quantity and the price, and you send to the person. When the person looks at that estimate and he or she is okay, he or she will now make what we call a sales order. Now, what is a sales order? To my next slide. A sales order is a document that a seller prepares and gives a customer to confirm that there is a sale of a good or a service. Now, in that sales order, the seller will mention the quantity of the goods, the price of the goods, right? So once the sales order is issued, the customer now, if the customer okays the sales order form, the next thing is to raise what we call an invoice. An invoice, right? Is to raise an invoice, right? Now, we are going to look at examples of these transactions. So this is what we are going to look at. Under this section, we're looking at how do you create an estimate in QuickBooks? How do you turn an estimate into a sales order? How do you turn a sales order into an invoice? You have issued a customer an invoice. How do you record payment on that invoice? And how do you create what we call recurring invoice? And how do you record a sales receipt? Now, these are the things we are going to look at under transactions that have to do with customers. Mr. Johnson, your hand is still raised up. Do you still have a question? Okay.
No, I don't have a question for now.
Okay, great. So let's start with the first. How do you create an estimate? Let me switch to my software. Now we are first to my Excel. So we'll be recording this transaction together. Now the first transaction is a transaction that happened on the 1st of January 2025. So one of the customers, Alpha Tech Limited, requests for an estimate for 10 Samsung phones, right? So this is what that estimate will give you based on the sales price per unit. So how do we raise an estimate? So let me go to my software. So on your software, 2 places you can go. You can click on sales and get paid, and you see where it is written estimate. Click on estimate. Mr. Teso, your mic is unmuted. Please mute. I can hear some background noise from your side. Thank you. Now, how do we raise an estimate? This is the estimate form. Look at how this form looks. You see the name of your company, the address, email, phone number. Now scroll down. Let's do this together. Let's scroll down. First thing, you need to select which customer is making this estimate. So if I click on this box, can you see that I can see the list of my 3 customers? Why is it showing? Because I've imported my customer list. I've created my customer list on the software. If you skip creating your customer list and you went ahead to create your products, suppliers, and you want to now come and raise estimate, if you come here and click this drop down arrow, you will not see anything. While we are seeing our customers, we can just pick the particular one this estimate applies to, is because we have done our work by creating our customer list. So you select the customer. Now, what is the estimate number? Automatically, a number has been generated for that estimate, right? So what date was this estimate raised? On the 1st of January 2025. 1st of January 2025 is the day of this estimate. You select it. Now, accepted date, expiry date. You could just leave them the way it is. But if you have an expiry date that estimate expires, we select it. Now let's scroll down gradually. Now we'll see this table. This is where we select what product are we raising this estimate for. Remember, it is for, what was that? It's for the HP laptop, am I correct? Yes, for Samsung phones. Yes, for Samsung phones this time around. Let me look at my inventory list and be sure. Is this Samsung phone or okay? It is like this HP laptop. Sorry, let me correct this.
Okay.
I'm coming. I think we don't have some. I think we don't have that. Let me see. Okay, it is for Samsung Galaxy. Yes, Samsung Galaxy. The person is going for how
You
many
said
units? Let me
you
see.
said 10 Samsung phone.
Okay, yes, let me go back. 10 Samsung phones. Let me remove this amount. Let's not confuse ourselves. So 10 Samsung phones. So I'm going to my software now. So I'll come to my software where we left off. Under product / service, I'll look for Samsung phone. It's like we omitted Samsung phone in this thing. I can see HP laptop. Let's assume it's HP laptop. Let's assume it's HP laptop. Let's not bother ourselves about the other products. Now, what quantity this person is requesting for 10 units of that HP laptop, right? And that 10 will give us 600,000. Will give us the rate is 600,000. The total amount gives us 6 million, right? We scroll down. So you can see that this is the total, there is no discount, and this is the total estimate. And when you scroll down, once you are done, there are two things you do. It's either you save, one, see this place on my screen, save and new will save this estimate and display another form if you want to enter another estimate. Now, save and close will save this estimate and close the form, right? Review and send here, we'll just review it and send to the customer. But let's just click save and close. So this is basically how you raise an estimate. This is how you raise an estimate. So I don't know if there is a question. Is there a question? Is there a question?
Good afternoon, sir. Good afternoon, sir.
Yes. Good afternoon. I can hear you.
Sorry. This is a QuickBook on the software, like on the cloud.
Yes.
So if we want to use it on desktop, the one on desktop, are we going to go through the same procedure to create this estimate?
Okay. What's the name?
Olakunle?
Okay. Were you in our class yesterday? No.
Yes.
Okay. Were you at the beginning of the class? Were you at the beginning of the class?
Yes, sir. And I started together with you.
Okay, so let me explain. I said something yesterday. Let me say it again. That this training is on QuickBooks Online. Now, there's QuickBooks Online and there's QuickBooks Desktop. The interface for QuickBooks Online is different from the interface for QuickBooks Desktop. On QuickBooks Desktop, where I need to go to create product and service is a bit different. It's different. Let me know the word. It's different from where you need to go on QuickBooks Online. They are both QuickBooks, but they have different interface. By interface, I mean how the dashboard looks, how things are organized on the software. That is where the difference comes in. Can you raise an estimate on QuickBooks Desktop and can you raise an estimate on QuickBooks Online? The answer is yes. The question is, how do I navigate to where I need to raise estimate? Is where the difference comes in. So to your question, you can raise estimates on QuickBooks Desktop, but through a different path, not the same thing we are doing here. So that, I don't know if that answers your question.
Okay, thank you.
Mr. Benga Oyale King, I can see your hand. Mr. Benga, I'll mute your mic and ask your question.
Thank you very much. Please, for the estimate part, what about if there is a charges for shipping cost, or is it not going to be included? Like, let's say, for example, now the price of this thing, there are some organizations that immediately they wanted to give you an estimate. They will still charge you that this is the money to transport this particular thing to the location of where it is.
Okay.
I don't know whether you get my...
Yeah, I got you very well. Now let me explain. Yes, when we started yesterday's class, I said one of the first things you do after you sign up on the software is to to put your settings in place. Let me just go back. We did this yesterday, but I'm just going to go back just to answer your question. Now, on my dashboard, if I go to settings, I go to account and settings. If you want your estimate to give provision for you to enter your shipping cost, you need to do that in your settings. Let me go to sales. If you come to where we did settings yesterday, there's a place for shipping. Let me go. Can you see my screen? Can you see my QuickBooks screen?
Yes, I can see it.
Okay.
Yes.
You know how let me show you how I arrived at this screen. This is my dashboard. There is this icon here called settings icon. You click on it. There are 4 sections here. Under your company section, if you go to accounts and settings, under account and settings, if you go to sales, and where you are seeing my cursor now, go to sales. You will see sales form content. I said yesterday that one of the most important things you do before you start posting transactions on QuickBooks or start using it is after you have signed up is to check the settings. Settings ensure that you establish your terms of operation, the way your company or your business operates. You set those terms and conditions on QuickBooks through your settings, so that when you start raising estimates, everything you want to achieve will be displayed on the sales form, be the estimate, the sales order, the invoice, and so on and so forth. Now, if you look at this table here, can you see shipping is off? Shipping is off. Can you see where shipping off?
Yes, I can see it.
Why it is off is because in our example, we are assuming that they are selling to people, they are not carrying out anything like shipping of product. But if you want to achieve that, you click on this pencil icon and you come to where you have shipping, you turn this button on. Let me turn it and click on done. So if I go back to my estimates, hopefully I should see a place for, let me do as if I want to raise another estimate. There should be a place for shipping fee. Let me turn this on. If I scroll down, can you see the form now? Can you see subtotal? Can you see subtotal, discount? Can you see shipping?
Yeah, I can see it now.
Why is it
Okay.
showing? It is showing now because I've done what I'm supposed to do in my settings. That's why I have it here.
Okay. All right, thank you.
So that, yes. Okay, so no other questions. We have raised an estimate. So we are done with the first transaction on that Excel sheet. So let's go to the next. So anyone I do, I'll just highlight it in yellow to know that I'm done with that transaction. Now let's look at, this is not actually Samsung phone. This is HP laptop. Let me correct this to HP laptop. So we are done with the first transaction. Highlight it. Now let's go to the second transaction that happened on the 3rd of January. So what's this transaction saying? It's saying that a sales order for the estimate sent of 1st January was raised. So we raised an estimate and this customer saw the estimate and is now wants to make a sales order based on that same estimate. So on QuickBooks, I can convert an estimate to a sales order. So that's what I'll show us now. How you convert an estimate into a sales order. So let me display my screen. So how do you convert an estimate into a sales order? First, I need to go and open the estimate form. Look at all, so I'll click on estimates. That's what I've done. I will now come here. Where am I? So where's that place again? Let me see. Is he here? Okay, let me see something. Okay, let me first of all select that customer, Alpha Tech. I'm coming. Okay, let me close. Yes, leave without saving. So let me go to sales order. Think, why am I supposed to see sales order? Estimate. Okay, let me go to sales order. Let me click on sales order first. Okay. Now, okay, create sales order. Click on create sales order. Now, you cannot convert an estimate to a sales order. Am I correct? Let me check. Let me check. Let me check. Let me be sure. Let me check something, please. Let me see. Let me go back to estimates. All apps, home, sales and get paid, estimates. I want to see if it is possible to convert an estimate to a, if it is not possible, we can just go ahead to create a sales order direct. Let's just go ahead to create a sales order based on that estimate. So what we are doing here is now is on our sales and get paid, we'll go to, or this section, we come to all apps, sales and get paid, go to sales order. Now I said that that estimate that customer requested for, they want to make it an order now based on that estimate. So I'll click on create sales order. So the first thing is select what is the customer name. I think it's Alpha Tech Limited. Now scroll down, you select, you can see shipping details are not coming in, shipping via, shipping date and all, because we have activated shipping settings. So we don't need it. I'll just leave it blank. This is the sales order number. What date was this sales order made? On the 3rd of January 2025. January 3rd, 2025 is the date, right? So the terms, now net 60. Remember it's showing net 60. I explained what net 60 is. Net 60 simply means if a person makes an order for a product today, a customer makes an order for a product today, he or she is obliged to settle the full amount on that product within 30 days. That's the meaning of net 30. Same for net 60. Is expected to pay the full amount within 60 days. Net 30 is the same thing. If a customer orders a product and the terms of payment is net 30, it means that customer needs to pay within 30 days of the date that sales order was made. So let's leave it at net 60. So you can see from this sales order date to due date, if you calculate it very well, it's 60 days. So it is telling you that the due date is 14th May 2025. It's supposed to be 2026. So from this to this is not, it's more than, it's a mistake. It's supposed to be 2026. May 2026, if I'm correct. It's supposed to be May 2026. 60 days should be, yeah, 60 days should be May 2026. 14th May 2026, right? Scroll down. Now, this is where we select the product. Similar to what we did for sales, for estimates. You come, what product? It is the HP laptop. For how many quantity? Remember, it was 10. It is 10, right? And you can scroll down. You see subtotal, sales order total. Two things you can do. You click on save. Save will save the estimate. Save and send will save the estimate. Send an electronic copy to the customer. Because you have the customer's email. When you are setting up the customer, you enter the customer's name, phone number, and email. You send an electronic copy to that customer. Now, save and close. We just save and close the form. Let's go for save and close. So that's how you raise a sales order. So we are done with the second transaction. I'll highlight it. Highlight it. Now let's go to invoice. The third transaction says on the 6th of January 20, I hope I made 6th of January 2025, an invoice for 10, this is laptop, this is HP laptop, for 10 HP laptop. Now we want to issue an invoice now. An invoice was raised. So we can raise an invoice from a sales order. Let's see how we do that. Let's go to our QuickBooks. So we are seeing our different, this is sales order we just raised here. Let's open it, right? So you will see where, I hope I see that here. It's supposed to be displaying. Maybe it's my settings. I'm supposed to see where I can convert a sales order and a sales order into an invoice. Supposed to be, let me close. Let me go to raising an invoice. So if you want to raise an invoice, let me see something. Let me see something. This is supposed to enable me convert. Let me quickly check my settings and see something. Let me go to sales, product and service, create multiple statements, invoice. Okay. Let me go back. No problem. Let me go back to my sales order. So this is my sales order. Let me open it. So on this sales order, normally I'm supposed to see where, I don't know if it's because they changed their interface, I'm supposed to see where I can convert, let me see, where I can convert a sales order directly into an invoice. Let me see, copy, I don't want to copy. Let me see. Okay, let me close. So let me just go direct to creating a fresh invoice. I'll check for something now. Now to create an invoice, if I come to this section for all apps, I'll go to sales and get paid, go to invoices. It will bring a template for me to create an invoice, right? So this is the template, and I'll see this button here that says create invoice. Click on create invoice. Okay. Miss Helen Ifedili, your hand is raised. Let me entertain your question. You can ask your question.
Okay, please, I just want to know if the sales order will reflect on the general ledger.
Yes, it does. You reflect on it. The only thing that doesn't reflect on general ledger is an estimate. Sales order reflects on general ledger. It will. Because
Okay, so if
go
you
ahead.
create it and now you're creating another invoice, won't that be like a duplicate transaction?
Yeah, that's true. But let me check. That's true. I was coming to that, but let me quickly check on that sales order again and see something. Let me check on that sales order. Normally, I was expecting that by the time I open that sales order, I should see a button that says convert this sales order into an invoice. Let me open, but I can't find it. That is why I am, let me see something. Okay, see what happens. Okay, I get your question. Now, let's leave the sales order the way it is. Let me try to create an invoice. I'll find out something now. Let me go to all apps, sales and get paid, and go to invoices. Now, there's something that will happen. Let me click on create invoice. Now, let me select that customer first. Alpha Tech, right? Thank you. Can you see something by the right of my screen? Can you see something by the right of my screen? Can you see something by the right of my screen? Okay, let me see.
Yes, I can.
Okay, I want to show you something, but that's not even where I'm driving at. That's not even where I'm driving at. Okay, let me close. I'm coming. Let me go back to my sales order. See what I want to do. Let me go back to my sales order, right? I'll explain why I'm doing what I'm doing. That sales order we created, right? Let me go back to it. I want to delete that sales order and do it again. Let me see something. Let me delete it. So how do you delete a sales order you have raised? There's a button here called more actions and delete. Let me delete. I'll explain why I'm deleting. I'll redo it again. Now I'll come to create sales order. So I'll select the customer's name. That customer is Alpha Tech, right? That was on the 3rd. That was on the 3rd of January 2025. Okay, right? So the due date, 60 days from that should be, and let me just leave the due date the way it is now, right? I select the product. That was for 10 HP laptop, right? 10. So this is the total amount, and I click on save and close. Okay, now I've saved that sales order, right? Now, oh, Let me see something. Okay, I've saved that sales order. Now let me try to raise my invoice. Now. Okay. Oh, hold on. Back to my sales order. Something is missing here. Something is supposed to be showing, but it is not. That is what I'm searching for. Let me see. Feedback, copy, settings, close. Let me close. Let me just try to raise my invoice. So what I'm expecting is, it seems there's a change in the interface. Normally, what is supposed to happen is this. If I raise an estimate, I can convert that estimate to a sales order. I can then convert the sales order to an invoice. In that way, your question, Ms. Helen, will be answered and it will not be a duplicate. It will not be a duplicate. Your question will be answered and it's not going to be a duplicate. But however, now I'm seeing that I cannot convert. Maybe I'll check later. I can't convert my oh, I've seen it. Right, I've seen it now. Are we together? Are we together?
Yes, sir. Yes, sir.
So this is the sales order. If I scroll to the sales order, Miss Helen, to answer your question, can you hear me, Miss Helen?
Yes, I can.
To answer your question, this is the sales order. If you scroll, you see a button here, this drop down arrow. You click on this arrow. Can you see where convert to invoice? So I'll click on convert to invoice. It converts that sales order into an invoice directly. Into an invoice. All I just need to do is, you can see an invoice form showing here. All I just need to do is scroll down, enter the date of the invoice, the exact date of the invoice based on my Excel sheet, which is 6th of January. I'll come here, select invoice date, 6th of January. Right? This is the date of the invoice. Right? Due date, this is supposed to be net 30. I don't know why this is showing. Let me just leave it like that. Then I've selected that. I'll scroll down. You can see I didn't need to start selecting the product already, because that's already picked the details of that invoice and display for me. So if I scroll down, the next thing is just to click on save and close. Save and close. So we have successfully converted that sales order into an invoice. You can see this is the sales order here. You can see the number, the date, and it is showing the payment status that it has been converted, it has been invoiced. Means it has been converted to an invoice. I don't know if that answers your question, ma'am.
Yes, it does. Thank you.
Great. Okay, so now we have created a sales order, converted a sales order to an invoice. Now, let's see how to record payments on an invoice. We have issued the customer an invoice. How do we now receive payments on that invoice? Let me share my Excel screen. This is my Excel screen here. We want to look at how to. So the transaction says on the 8th of January, payment for the 10 HP laptop, payment for 10 HP laptop was received. So how do we receive payment on an invoice? Let me go to my software, and on my software, I will go to all apps, sales and get paid, invoices. So I will see, scroll, okay, no matching invoice. So let me go to that sales order that was converted to an invoice. Let me go to sales order. Okay. Let me open it. So it is now showing that it's a sales order. Let me go to, so let me go to invoices. customers, okay, sales and get paid, invoices. So since we've converted, okay, now since we've converted the sales order into an invoice, let me go direct to receive payments. Let me go to my all apps. If I go to sales and get paid, I'll come to, there's a place for receiving payments. Let me see. Okay, let me go to my home page. Okay, sales and get paid. Scroll down to invoices. Okay, let me see something. There is, I'm coming, please. Let's see. Okay, I think this is what I'm looking for. Okay, so if you go to your dashboard, now let's go together. This is my home. This is my home app here. You can see where my cursor is. I click on home app and I come to sales and get paid. I click sales and get paid. If I scroll down, if I see where it is written receive payment, I'll click on receive payment. Right? So now the first thing is I'll select a customer. Now select a customer, right? It's Alpha Tech. Right? So I've selected Alpha Tech. Now, let me see. Okay. Now I've selected Alpha Tech. Let me scroll down and check for something. Okay. Now, because I selected Alpha Tech, you can see the information about this customer has been populated, the name. Now, what date is this customer about to make payment? Are we about to receive payment? We're about to receive payment on the 8th of January, 2025. So if I come here, I'll select January 8th here. Now, you choose payment method. What payment method is this customer paying you on? What payment method? You need to select your payment method. If the customer is paying you by cash, by check, by credit card. So let's assume this customer is paying us by check. So select check here. For reference number, I can just enter the check number here. Then deposit to. You see, we have just one bank account. This customer is paying us directly to our EcoBank. So you must select the bank the customer is paying you into. Now, if you scroll down, I want us to notice something about this table. This table has two items. The first one says invoice on 31st of December 2024, 400,000 at the date. This is showing us first the opening balance. Remember, when we started yesterday, we imported our customer list and the balances they were owing us. This particular customer was owing us 400,000 as at 31st of December 2024. Now, we have issued another invoice again, meaning the company's indebtedness to us has increased by another 6 million. Why they are showing us this table? They want to know on which of the invoices are we receiving payment. Is it on the balance the customer was owing before we enter the new year, or on the fresh transaction the customer has done? So I'm interested in this fresh transaction. So when I come to this place for payment, I'll enter the 6 million here. I'll specify. However, when there are some situations that a customer will want to make payment and tell you that, first of all, clear off the 400,000 that I was owing, then the remaining balance should settle my new invoice. But we're assuming that we want to settle this new invoice that this customer raised, which was converted to a sales order. Once you select it, you scroll down and you click on save and close. And that will be that about recording that payment. Question. Is there any question? Let me not be moving fast and leaving us behind. Is there any question in regards to what I've done? Any question? Okay.
Please,
So
I have a question.
Okay, go ahead.
So that previous balance, the 400,000, the one you brought forward, what then happens to it?
It still remains there. Now, it is possible that that customer later will say, the software still tracks that balance. Now, why I did this is because this customer was paying for this new transaction that was initiated. It's possible that during the course of the months, the customer might say, I want to pay my remaining 400. So what we'll do is we'll raise let's say today that transaction was done on the 8th of January. Let's say 2 days after, that customer says, I want to clear my opening balance. What you do is you go to open this receive payment here. Let me show what that means. Let me click on receive payments. Sure, you can see my QuickBooks screen, right? I've clicked on receive payments, right? If I come to the customer, now if I go back to that form, only this balance will be showing. So if the customer now sends 400,000 and says, I want to settle my opening balance, I just need to go to receive payment. When I come, I just enter the 400 to clear it off. So the 400 is still standing. It is still standing. It has not been thrown off. It has not been cancelled or it has not been wiped off. At any point in time, if the customer does not settle it this year, it will continue carrying forward. But it still stands until it is cleared. I don't know if it answers your question.
Yes, it does. But please, I have another question.
Okay.
In the case where the customer decides not to pay, not to make that payment, and you as the company, you want to close off your book for the year. So what do you do?
Okay, so as an accountant, now when you set your terms of payments with customers, right? There's what we call aging analysis, age receivables. So this customer has defaulted. The year is ended and that customer has not paid. Now, in accounting, there's what we call bad debt. You can do two things. Keep on following up on the payment of that money, or you write it off as bad debt. So what will happen is that balance of 400,000 is showing in your account receivable. And you know account receivable it's a debit balance. So you do a journal entry to be able to wipe off that debt. And what is the journal entry? That balance will be showing in your books at the end of the year under account receivables, 400,000. Now, the year has ended. For the customer not to have paid from January to December, you're about to close your year, and you're not getting any response from that customer. So it is pointing towards a bad debt. So how do you write off bad debt? You have to cancel that receivables from your book. And that 400,000 will now be an expense for you. Because if I wipe off somebody's debt, because in accounting we consider that the business is separate from the owner. So if I wipe up a debt, it means I've taken up the responsibility. I took the burden. So I wipe it off as bad debts by debiting bad debt expense. I credit account receivables. So that's the way you do. You have to wipe it off your book. If the customer is not responding to payment, it needs to be wiped off your book by doing a journal entry to wipe it off. If not, at the end of the year, if you generate your profit and loss, your balance sheet, which we'll do, you will see that you still be showing standing as 400. So I don't know if that answers your question.
Yes, it does. But please, I hope I'm not being too forward. Can
No.
you just do some journal entry that you explained? Can you just show us how it works?
Okay, now before I do that, it's a good question. We're all learning. Now, before I do that, let me show you something. Let me quickly generate reports and you see that, okay, it's still showing off in the books. Now, let me go to reports and show you something first. Let me scroll down. Let me show you. We'll come to reports, but I just want to answer your question in a way that everybody understands. If I come to reports and I scroll down and I go to account receivables, aging details, now I'll see all our customers and their balances, what they are owing. Now see this guy here. This is the 400,000 you're talking about, still standing, and others. Now take note of what our receivable is showing, 2 million, right? You can see my screen, right? Can you see my screen? Can you see my screen?
Yes, sir. Yes, sir.
Yes, you can.
So let's assume that we have gone towards the end of this year and this guy with his 400,000 is not paying. We want to wipe it off as past debt. What I'll do is I'll come to this create button, create here. I'll come to journal entry. I'll do a journal entry now. Now let's say this, I'm going to put as at 31st of December because what I'm doing this is because the customer is not paying, So it means at the end of the year, 31st December, for instance, this is how we do a journal entry. You can see this table showing account, debit, credit, description, name. The first account is the account I want to debit. I'll put, if there's an account for bad debt, let me type bad debt. Can you see bad debt is an expense? Click back debt. I'll come here, debit 400,000. Come here, credit account receivable. Account receivables. However, when you select account receivables, you can see debits 400, credits 400. I need to come here and select which particular person am I referring to when I talk about this 400. I need to select that customer here. So that it will apply to that customer specifically. So if I select that and I click on, what do I click here? Let me see. So I click on, let this thing go down so that I can. Okay, I'll click on save and close. I've recorded that journal entry, right? Let me refresh my aging analysis now and see if that thing will still be showing. I don't expect it to show. If it still shows, then something is not correct. Something is not right. Okay, it's still showing. Normally it's supposed to be cleared. Let me see. It is supposed to be cleared. Okay, see, it has been cleared now. Can you see? Can you see my aging report now? See what was standing before. 2 million, right? The 4 million for that guy, 1 million and 6 million. Now I write off 400,000, specifically Alpha Tech. So it means it is now remaining 1.6. It has been wiped off. It is no longer existing. So, well, to see the effect, if I generate my reports, if I go to reports and I go to balance sheet here, and I try to generate my balance sheet as at the end of our current year, right? As at 31st of December 2025. This is why I select my period from 1st of January 2025 to 31st of December 2025. This is 31st of December. Okay, 31st of December 2025. Right? And I click, okay, this is 1st of January 2025. First. Right? If I generate my balance sheet, if you see my account receivables figure is now showing me 1.6. Instead of 2 million, it means that 500,000 has been wiped off. I believe this answers your question very well.
Yes, it does. Thank you.
Great. Now let's go. So we are done. Last thing under customer transaction before we go for break and we come back for the second half. Now we want to look at what is called a recurring invoice. Let me share my Excel screen. We want to look at a recurring invoice. Now let me explain what a recurring invoice is. Then we'll look at an example. Let's say one of the customers that buys laptops from this company enters into a contract and say, on the 10th of every month for the next 3 months, I want you to supply me 10 HP laptop. Now that's a contract to supply 10 HP laptop every month for the next 3 months. You can, instead of waiting to the 10th of every month to raise an invoice, let's say 10th of April, I raise an invoice. I wait again, 10th of May, I raise another invoice. You can set up what is called a recurring invoice on QuickBooks. You just raise one particular invoice, set it up as recurring. It means that once it gets to the next month, the date that you're supposed to make that supply, the invoice will fly automatically. When it gets to the 3rd month, you don't need to come and manually set it up. It will fly. Now, I'm going to show us how to do that example, but it's not going to be practical because this software works on real time and we are in 2026 and we are posting transactions for 2025. It might not apply, but let's assume that today is 15th today is 15th of March, and one of these suppliers says supply me 10 HP laptop for the next 3 months. It means an invoice needs to be sent on the 15th of April, an invoice needs to be sent on the 15th of May, an invoice needs to be sent on the 15th of June. Instead of waiting till those dates to start sending them on your software, you can set up what is a recurring invoice, where you just create one invoice today, put today's date, and give QuickBooks the instruction to manually send it when it gets to that date. Now, let me show you how it works before we go for our break. Now, on my software, right, on my software here, if I come to create, right, let me go to create, and I come to invoice. I'm going to use today's date an example. For instance, a minute, please. Okay, so what I'm saying is, on the software, this is an invoice now. Now, let me use today's date as an example. Today is 15th. Let me select 15th here. 15th of March. Today is 15th of March. Let me say I want to raise an invoice based on that contract, right? So it is for what? For HP laptop. And we want okay, let's say two HP laptop and invoice. Now, once I've entered the details, if I scroll down, there's a place. Can you see where it is written make recurring? Can you see on the bottom of my screen? Can you see where it is written make recurring? Can anybody see it? Here, where my cursor is. Can you see it?
Yes, you can.
Yeah, so if I click on this make recurring, it's going to ask me some questions.
Okay.
Now it's going to ask me some questions. It will ask me, now let me give it some minutes to pop. So it's going to ask me, okay, by the right of my screen. Now type schedule, create number of days in advance. So let me put 2 here. If I scroll down, it's going to ask me automatically send emails, include on bill charges, mark as print later and all. Now it's telling me, do I want this to repeat on the first day of every first month? It means that my next invoice will be created on the 29th. So I'm setting up the invoice today, but I want it to start, my start date. I want it to start on 15th of April, right? And end when? And end by, I'll select end by, I want it to end by 15th of June. 15th of June. And this part that says repeat, so repeat after every 1 month. So on what date? Let it go on the 15th. So this is how you set a recurring invoice, such that if I save this template, once it gets to, okay, I need to select the customer. Once it gets to those dates, automatically those invoices will fly on their own without me sending it one after the other. So we have spent 1 hour 30 minutes. So we'll pause here. I'll entertain questions, then we'll come for the second half of the class. Meanwhile, any question? Okay, no questions. Then in the next 5 minutes, we'll come back for the second round. Then we'll complete the class. Thank you. so we can continue now. So let's continue. So we are done with transactions that have to do with customers. Let us look at transactions that have to do with vendors, right? Vendor transactions. We have to, I'll just be looking at just 3. Now so the first transaction is talking about that happened on the 6th of January. This is 2025. The first transaction is the one that happened on the 6th of January 2025, and it's a purchase order. A purchase order for 5. This is not Samsung. This is HP laptop. A purchase order for 5 HP laptop. Let me just forget about this total amount. A purchase order for 5 HP laptop. So a purchase order is a document that a buyer, let's say a supplier, sends to you want to buy something from a supplier. You need to raise a purchase order that is being sent from a supplier. So this vendor, we are making a purchase order from this vendor for 5 HP laptops. So let's go to my software. How do you raise a purchase order? So to raise a purchase order, we'll go to where you have create and come to under suppliers, click on purchase order. Purchase order. Now, the first thing is to select the supplier. So we are buying from, okay, I think it's, okay, forget about this, my supplier list. Let me correct this, my supplier list. Where is that list? You see, okay, my supplier, okay, let me just choose any of the suppliers here. But the transaction, let me change the name of this supplier's names here. We have, what do we have? We have ABC Limited. Let me just put ABC Limited here, and I'll copy across. ABC Limited, I'll click on save. Now, let me go back to my software. Back to my software. Where's my software? So this is my software. So let me share my Excel screen first. So this is my Excel screen. So we are making a purchase order from this vendor, ABC Limited, right? So let's go to our QuickBooks. So first thing is to select your supplier. So if I click here, select ABC Limited. Now the dates we are raising this purchase order is January 1st, 6th of January 2025. So select 6th of January 2025 here. Select it, right? Then I'll scroll down. I'll select the, now 2 sections here. We have category section and item section. So because this is a purchase order for an item, something we sell, I'll come to this area that says category. Item, sorry. Click on this drop down arrow. I'll now come and select the product. So this is for HP laptop. Select HP laptop, and we are buying 5 HP laptop from this vendor. So it's a purchase order for 5. So I'll enter 5 here. Then you see the total amount for that 5. If you scroll down, you can click on save and close. And you have,
I don't know whether it's my screen. I'm not seeing that.
oh, sorry, yeah, true. Let me take it again. Let me delete it. Let me delete it and do it again. Sorry, I'll take it again. Let me go back to, I'll delete it and do it again. Let me go back to I'm coming, please. See. Okay, let me do it again. Let me delete it and take it over. Take it again. So this is what I'm saying. Let me delete it. Let me delete it. I want to delete it. So I'm saying that, let me start by sharing my Excel screen first. So I'm saying we want to record customer transactions. And the first we want to look at is this transaction here. You can see my Excel screen now. This transaction that happened on 6th of January 2025. So the company made a purchase order, an order from a supplier for 5 HP laptop, and the supplier is ABC Limited. So if I go to my QuickBooks, let me share my QuickBooks screen. So on my QuickBooks, how do I raise a purchase order? I'll come to this plus button here, and I'll come under the supplier section. I'll go to purchase order. Now, the first thing is to select the name of the vendor, the supplier you are buying from. So I'll click on ABC Limited. So this is the date, 6th of January 2025. My date has been selected. I'll scroll down. Now I have two sections, category details and item details. Since we are talking about purchase order for a product, I'll come to this item details section. I'll select it. I select the product I'm making the purchase order for. Then I'll enter my quantity here, 5. It will now display me the total amount. I'll see the total amount here, and I'll click on save and close. I am done with that particular transaction. Now let's look at the next transaction on that Excel sheet. The next transaction says on the 7th of January 2025, was raised. Now, a bill is a document you raise before you make payment on a purchase order. So it starts with a purchase order. From a purchase order, you convert a purchase order to a bill. From a bill, you now make payments on bills. You cannot make payment on a purchase order. It has to be on a bills. So let's convert that purchase order into a bill. Now, let me share my QuickBooks screen. So on my QuickBooks screen now, I will go to the plus icon. I will go to pay bills, right? I'll come to, let me go to, first of all, I want to raise a bill. Sorry, I want to raise a bill. I'll come to create icon, go to bills, because I want to raise a bill before I make payment. I'll go to bills. Now, the first thing is to select the vendor, ABC Limited. Now, the dates. Now, once I select ABC Limited, if you notice at the right of my screen, it's already telling me that there is a purchase order that I have pending with this vendor, right? So if I click add, this is me telling QuickBooks that I want to convert this purchase order into a bill before I make payment. Why did it show by my right? Because I've already selected that it's this supplier, and QuickBooks has already known that, oh, there is a purchase order with regards to this vendor that you have not settled. Do you want to convert it into a bill? So if I click on add, it will convert that purchase order details into a bill. You can see it has already brought it into this table, right? It has brought it as a bill into this table. And what date is my bill? It's on the, what date is my bill? It's on, if you check on your Excel screen, the date of that bill is 7th of January. So I'll go to my software and select 7th of January. So my software, I'll come and select 7th of January, the day I want to pay that bill. I'll scroll down, it's the day I want to raise that bill, and I'll click on save and close. So I have raised the purchase order, I have raised a bill with regards to that purchase order, and the last thing I want to do, which is on my Excel screen, is to make payments. So our last transaction says, still on the 7th of January, payment of bill that was raised on that same day is made, right? So how do we make payment on a bill we have raised? On my software, this is my software. If I click on the create button and I go to pay bills under the supplier section, pay bills, right? The first thing is to select what amount do I want to make payment from. I want to make payment from my EcoBank, and what date. I want to make payment on the 7th of January 2025. 7th January 2025. I'll scroll down what currency I'm paying in Naira. I will now scroll down Okay, it's now telling me that you don't have any bills. There's a particular bill. I need to select the vendor first. Let me see. Okay, let me close this. Let me go to those bills. Let me come to create bills, right? So if I come to this clock icon here, I'll see all the bills I've raised. So the bills I just raised now is this bill here, this last bill. This bill that is showing, these other bills are closing balances we are owing our vendors. You can see they are showing 31st of December 2024. But the most recent bill that we raised is this one. I'll click on it. It will open, and I can now, you see by the right of my screen where it is written mark as paid. If I click it, mark as paid, it will now raise a bill payment form, now telling me that I'm about to make payment on that bill. So it has selected the bank I want to make payment on. If I scroll, I now choose my date. It's the same date. It is now showing me two bills. Now, similar to what we saw for customer. At the beginning of the year, when we enter the new year, we are owing this vendor 500,000. We're owing this vendor 500,000. Now, we want to settle this new bill. So it has been selected. We click on save and close. And you have made payments on that bill, right? You have made payment on that bill. So let me entertain questions before we go to the next section of the Excel sheet. Any question, please? Any question, please? Okay, great. So no question. I can proceed. Now, the next thing we want to do is, how do you record expenses, operating expenses? So if you can see my Excel sheet, we are on the expense sheet now. So on the 6th of January 2025, this is 2025, assuming this company, Bright Star Electronics, made payment for office rent, how do you record it on QuickBooks? The company has made payment for their rent. How do you record it? So to do that on QuickBooks, you use what we call an expense form. Let me share my screen. So on QuickBooks, on the create button, under the supplier section, you go to expense. Now, it will ask you the first thing is going to ask you is who do you want to pay? Now, that vendor is not on our list. The name of that vendor, if you look on our Excel sheet, the name of that vendor is Real Estate Management Limited. So we want to set up this vendor, right? We want to set up this vendor, right? So how do I set up this vendor? So if I come, who do you pay? I will not see the vendor here. I'll click on add new. It will bring a form for me to quickly create this vendor. So I'll just enter his or her name here, the real estate management. You have their email, phone number, you set. Most importantly, ensure that the currency is Naira, because you are paying for office rent and you are within Nigeria. You are paying for rent for the business premises in Nigeria. So if you have the company address, city, state, and all, you select it. Most importantly, if you have their balance, if you still have balance outstanding, you enter the balance here. But meanwhile, you must ensure your date is at 31st of December 2024. So I'll select that and click on save. Now, the bank we are paying from our Eco Bank, right? So what is the date? That date is 6th of January 2025. What is the payment method? Are you paying through cash, check, or debit card, direct debit, or credit card? Let's say we are paying by check. You now enter your reference number here. The reference number could be your check number, the check number. Now, when you come to this form, you come to category now. You click here and you look for rent. Now, remember in our chart of account, we have not created rent. let me go back to our chart of account. On our chart of account, we have not created rent, so we can quickly do that now as we are about to make this payment. So I'm switching to my Excel file. You see our chart of account, we have rent expense here. See rent expense in our chart of account. Let me highlight it. So our chart of account, rent expense is 5,001. So back to my software, I will come to here. So I'll click on add new, and I'll quickly create rent expense as part of my chart of account. Rent expense. Then if I go to the account number, it is 5,001. So what type of account? It's an expense. So I'll select, let me see. It's an expense. So I'll select expense here. No, it's not cost of sales, it's other expenses. Let me see. Oh, supposed to be not cost of, let me just leave that. We can always change it later. Let me just put, you can always change this later, but let me see something. Okay, it's not cost of sales. Okay, expenses, right? So under detail type, it is under what kind of expense? It is under, let's select it under other office general and administrative expenses. Right?
Sir.
So, yes, go ahead, please.
Sorry, sir, your
I'm
screen
not
is
seeing
paused.
your screen.
Oh,
Your
can you see
screen
my
is
screen?
paused.
Check am again.
Can you see?
We are not
Can
seeing
you
it,
see?
sir.
No, they discovered which disappointed and
Please mute your mic, sir. Mute your mic. Mute your mic. Mute your mic. Mr. Jewel, mute your mic. Jewel, mute your mic. Okay, can you see my screen now? Are you seeing
No,
my screen
sir.
now?
No.
What of now? Can you see it now?
Not yet.
Okay, I'm coming.
No, sir.
Okay, I'm coming.
Okay.
No.
I'm coming, please. What of now?
Not yet.
Something. Can you see it now?
No, sir.
Can you see? What are you seeing? What are you seeing on my screen? What are you seeing on my screen? Can somebody tell me what he or she sees on my screen?
Bill.
Can somebody?
Right, when you're creating bill.
Sir, it's showing that Callistus and Nene has paused screen sharing.
Okay, I'm coming.
I can see your screen.
You can see it now. Can you see it now?
No, sir.
No, sir.
Okay, please let me do something.
Okay.
Can you see it now?
Yes, I can see your screen.
Yes, sir.
Okay,
Yes.
now, so let me go back a step backward. Let me go back to my Excel file. So I was saying that we are about to record an expense, an operating expense, and this company paid for office rent on the 6th of January 2025. This is my Excel screen now. They paid for office rent 1 million. And I was saying, how do you record operating expenses on QuickBooks? You use what we call an expense form. So how do we do that? Let me share my screen, my QuickBooks screen now. So on my screen, you can see my screen, right? On my QuickBooks screen. How did I get to this expense form? How did I get here? I went to create button and I go to expense. Now, I'll first of all select who I'm paying. I've created that vendor, the person I'm paying rent, real estate management. This is it here. Now select the payment account. Which account are you paying from? Select it. What date are you making payment? 6th of January 2025. What method of payment? Is it by cash? Is it by check? Is it by credit card? Or is it by debit card? So we are paying by check. Then reference number. This is where you enter a reference for this transaction. It could be your check number. It could be transfer number. Any unique number that has to do with this payment, you enter it here. You will now scroll down. You come to this area for category. You select what kind of expense you want to pay. It is rent. If you type rent here, rent will pop up because if it doesn't pop up now, okay, I'll click on add new. It will bring this form for me to create rent as an account. So I'll type rent. If you check on our chart of account in the file, Excel file I shared on the group, you go to the sheet where it is written chart of account, you'll see rent expense. And that rent expense has an account number of 50001, right? So what account type? It is an expense. So I'll go to under expense. Under expense, I'll select not cost of sales now. I'll go to I'm coming. I'll go to expense. Let me drag this down. I'll select it under category as an not cost of sales, but rather an expense. Right? So what is the detail type? So this is an office and general administrative expense. I'll now click on save. So I've entered it 5,001 rent. Description, I'll just enter payment of office rent, right? I'll enter the amount 1 million, right? That's 1 million. I click on save and close. Then I'm done with that transaction. I'm done with that transaction. Now the next transaction on my list, the next thing we are going to is how to do an interbank transfer. Let's say the office transfer money from EcoBank to their petty cash, movement of money from one bank account to the other, or from a bank account to a petty cash account. How do you record transfers on QuickBooks? So if you come here, you come to the software. Let's go to our software. If you go to click on the create button, if you come to the click on the create button, on the order section, you will see transfer, right? Click on transfer. Now, this form, transfer form will display to ask you transfer funds from, we are transferring from our EcoBank and want to transfer to our petty cash. Let's say we want to move some money from office bank account to and fund our petty cash. So the currency in Naira, let's say we want to fund our petty cash with 100,000. So you enter 100,000 there. And let's say we are doing this transaction on the 9th of January 2025. And once you are done, you can enter a memo and you click on save and close. Okay,
Sir, you pick
select.
EcoBank and EcoBank.
Oh, thank you. Yeah, so it has to be from EcoBank to Petty Cash. Sorry, from EcoBank to Petty Cash. That's why this error came up. From EcoBank to Petty Cash, you click on Save and Close, and that is that. Now, one last transaction we are going to do before we go to how to do bank reconciliation and close the class with how to generate report is journal entry. I've shown us how to do journal entry here, but I'm going to do it again. Now, journal entry is used mostly for, there are different reasons why you might want to use journal entry, but I'm going to use one example. Let's say you want to record depreciation expense. You know, you can't use invoice. You can't use purchase order. You can't use a bill. You can't use an expense for, you can only use a journal entry. I know, let's say you want to record depreciation expense. We did not record any asset, any fixed asset here. But let's just assume that we have a fixed asset in our chart of accounts. Let me just quickly do an example. Let me go to create. Let me go to home. I'll go to accounting, and let me go to charts of accounts. Where do I go? Charts of accounts. Let me go to my chart of accounts. Let me create a fixed asset. Let me quickly create a fixed asset. And for the purpose of this example, I'll click on new. Let's call it motor vehicle, right? Motor vehicle, right? Now watch. Let's forget about the account number for now. Under account type, it's a fixed asset. I'll select fixed asset. Now, detail type, it is under vehicles, right? Now, under currency, allow it as Nigerian Naira. Original cost, what's the cost of that asset? Let's say that asset cost us 5 million. At what date did you buy that asset? Now, the date you buy the asset must not be the beginning of your new financial year. Let's say this asset was bought in, let's just assume that we bought this asset too in January. Let's assume we bought it in January, 1st of January 2025, for instance. It was bought on the 1st of January. And they will ask you, do you want to create a category to track depreciation? Remember, when we talk of fixed asset, you're supposed to be tracking depreciation of that asset. We have just created the account and we have said the original cost is 5 million. If I check this box, it will bring another place for me to enter depreciation, right? To enter depreciation, right? So original cost. Let's say depreciation as of what we have as accumulated depreciation as at let's say what we have as accumulated depreciation as at, let me just, which example will I use now? QuickBooks Online creates two accounts for this asset, an account to track costs, an account. So let's say accumulated depreciation as at that date. Let's say by 1st of January 2025. By 1st of January 2025, let's say it was 500. It's 500,000. What it means is the carrying value of this asset is 4,500,000. How do you get the carrying value of an asset? You take the cost minus accumulated depreciation, right? So I'll click on save. Now, let's assume at the 31st of January 2025, we want to record depreciation for that month. Depreciation for that month. Let's just assume depreciation for that month is 20,000. So we cannot record depreciation using an invoice, a bill, a sales form, a sales order, an estimate, any of those vendor and supplier and customer forms. We can't use them. We can do that using a journal entry. So how do we do journal entry? Now, if you come to the create button, and I'll come to journal entry. Mr. Johnson, I can see your hand, but let me finish with this transaction and I'll attend to questions. So I'll come to 31st of December 2025. I'll come here. I will debit my depreciation. if there's a depreciation expense account, depreciation, let's say with 20,000, and our credits accumulated depreciation. If there's an accumulated depreciation account, if not, I can quickly create it. Accumulated depreciation, right? I'll credit it with 20,000, right? Then I can now enter a description. I'll say being record of monthly depreciation expense. Once you enter your description properly, you select your date, you click on save and close. This is just a sample. This is just an example of where you can use journal entry. You can use it too for prepaid expenses, accrued expenses. You can use to record that using journal entry. You can use journal entry for any of those kinds of transactions. Okay, Mr. Johnson, I can see your hand is raised. What's the question? Please, you can unmute your mic
So
and
my
ask your
question
question.
is on that depreciation. Is there no way? Okay, can you hear me now?
I can hear you loud and clear.
Hello?
I can hear you, sir.
Okay. So my question is that depreciation, is there no way it can automate itself, like putting the year that you want this how will I put this, the span, like this thing, the
Yes, I
duration that you
understand.
want the assets to finish paying back?
I understand. I understand your question. You want such that automatically you'll be posting the depreciation for you, right?
Yes.
Now, that option is now available for this particular QuickBooks plan. Remember in the beginning of the class, I mentioned there are 4 plans. There is the Quick Start, there is the Essential, there is the Plus plan, and there is the Advanced plan. If we are subscribed for the Advanced plan, I'll show you how to set up your fixed assets so that at monthly basis, it will be doing the posting for you automated. But it's not available because of the plan we subscribe in our free trial. So the highest plan in QuickBooks Online, the advanced plan, will do that for you perfectly.
All right. Thank you very much.
Great. So now we are done with transactions. What I want to talk, 2 more things. The second to the last is how to do bank reconciliation. Now, what's bank reconciliation? Now, when you are posting transactions on your QuickBooks on day-to-day basis, right? At the end of the month, what the bank will normally do for you is they'll send you a bank statement of all your banks you're operating. And so when you take a look at your bank statement and you take a look at transactions you have recorded with regards to a particular bank on your QuickBooks, you need to do what called bank reconciliation. Now, what bank reconciliation is saying is check through your transactions for a particular bank account, all the payments you have been making through a particular bank, and all the inflows you have been receiving into that bank, and look at your bank statement. If there are transactions that you have recorded that are on your bank statement, but they are not on your QuickBooks, you need to post them. If there are transactions on your QuickBooks that they are not reflecting in your bank statement, it means you need to wipe them off, because as of when you are posting it, the bank has not recorded them for 1 or 2 reasons. So how do you do bank reconciliation? If I come to home and I go to under accounting and I come to reconcile, I'm just going to show us how to do it, right? So if I scroll down, I come to get started. Now, when you are posting transaction on the software, there are some things that will elude you. There are some things that you will not know that are happening in your bank statement. And what are we talking about? What are the things that will be, what are the transactions that will be reflecting in your bank statement that you will not know until the end of the month? An example is one, bank charges. If you take your bank statement and you look from 1st of January 2025, in our case, to 31st of January 2025, you see a lot of bank charges. 50 naira VAT, 2 naira stamp duty, 3.75 naira NIP, and all those small transactions. You will not have an idea of those transactions until your bank statement is before you. So when you get your bank statement, you need to capture all those charges. So if I click on get reconciled, it's going to ask me which account do you want to reconcile. Now, when you are doing bank reconciliation, you do it bank after bank. You finish with one bank, you finish with a particular month for a particular bank. If you want to continue that same bank, you move to the next month, and so on and so forth. So what I'm saying is you can't do two banks at the same time. It has to be one bank in a sequential order, starting with the first month, going to the subsequent month until you finish the reconciliation for all the months in that year. So the first thing is to say, which account do you want to reconcile? Let's assume we want to reconcile our EcoBank. You know, we have been doing some customer transactions and vendor transactions on our EcoBank. So we want to reconcile it. Now to ask you, what is the beginning balance? Our QuickBooks recorded that we have beginning balance as 5 million, but it's going to ask you on your bank statement, what is the ending balance on your bank statement when you have your EcoBank bank statement as at 31st of January 2025? What was showing as your closing balance? Let's assume it was showing 7 million, right? We'll come here and enter statement ending date. So January 2025 ends in 31st. So I'll select 31st January 2025. Scroll down. They'll ask you, enter service charge or interest earned if necessary. So let's start. Service charge. So our date is the last day of the month, which is 31st January 2025. Now, service charge. Now you look at your bank statement. From the 1st of January to the 31st, add up all the bank charges, add them all up. Let's say you add them up, you go line by line and you add, and everything gives you, let's say, 550 naira. You come here, you enter 550, right? The expense account is already showing bank charges. You now look at your bank statement too. On the credit side, all the small interest that have accrued. Most of the time, our banks don't have small interest, don't have interest, but just add up whatever is the interest that you earn, interest that will earn on that account for the month. So you come here and select 31st December 2025 and still select 31st of December, and let's say the interest is just 100 naira. You enter 100 naira here. The income account is interest income. You now scroll, you click on start reconciling. Scroll. Okay, start reconciling now. You scroll down. This is what the reconciliation is saying. These are all the transactions you have recorded in January. When is your reconciliation complete? When will you say that you have done proper reconciliation for a particular month? You can see a figure showing me a difference of 2,450,000. My reconciliation will be complete if my difference is showing me 0. And how does my difference show me 0? I'm seeing all the transactions I've done in 2025. I'll be looking at my bank statement. The first transaction here is a payment on the 6th of January. I'll look on my bank statement. Is there a payment on the 6th of January worth 1 million, which is what I'm seeing here? If I can see it on my QuickBooks and I can see it on my bank statement, I'll check this box here. I'll now go to the next line. My QuickBooks is showing me for this bank that on the 7th of January, a payment was made for 2,600,000. If I go to my bank statement and I see a payment of on the 7th, 2.6 million, I can see it on both sides, my bank statement and my QuickBooks. I will now check it, right? I will now continue. On the 8th of January, I can see a deposit of 6 million. I'll now look on my bank statement on the credit side. Is there a 6 million? If there is a 6 million that from a particular person, which I can identify on my QuickBooks, I'll check the box here. Now, lastly, I'll now come. I can see on this 9th of January, there is a payment of 100,000. Can I see transfer of 100,000 on my bank statement? If I can see it, I'll check this box. Then continuing. So when I'm done, I'll still discover that there is a difference of 2,950,000. What that means that it means that there is a payment that has happened in my bank statement that I've not reconciled. I need to trace where this difference is coming from, right? I need to trace where this difference is coming from. So if I trace where the difference is coming from, I'll go to my QuickBooks, record it. If I come back, I will see it amongst the transactions here. I will now check and it will be reconciled. But if I cannot trace where this difference is coming from, I will instruct QuickBooks to post it to an account called adjustment account, pending where I can trace where that difference is coming from. So if I come here, I can click on, what do I want to do? Let me see.
Please come again. Please come again.
Okay. You understand the process so far. You have been checking your bank statement. You have been checking your QuickBooks. You are seeing transaction. You saw a transaction on QuickBooks. You saw a transaction on bank statement. You identify it here. You check the box. You keep going line by line, looking at your bank statement, looking at your QuickBooks, all those transactions. When you check, and you keep checking all these boxes, two things will happen. Your difference will amount to 0, or your difference will show a particular figure. That figure might be just one transaction that maybe it's on your bank statement you have not recorded on your QuickBooks. You now quickly go and record it. This difference will be cleared. You will now be showing 0. In a case where you cannot identify where that difference is and the amount is not that big, you can post it to an account called adjustment account. How do you do that? You come here. Let's click here. Click on finish now. QuickBooks will say, hold on, your difference is not 0 yet. So this is QuickBooks telling you that for your reconciliation to be complete, the difference needs to be 0. So it now says you are ready to reconcile yet because your transactions in QuickBooks don't match that of your statement. When they match, you have a difference of 0. If you like to proceed, confirm the following below and then click add adjustment and finish. So if I click add adjustment, QuickBooks will just take that difference and put it in an account called an adjustment account. Why? Because you cannot identify where that difference is coming from. So it's telling you that we'll do an adjustment entry on the 31st of January 2025. If I click on go, let me see. If I click on go now, my difference has been cleared. I'm done with the reconciliation. I'm done. That difference is no longer existing. This is just how you do bank reconciliation. Now, finally, the last thing we are looking at, this thing is still showing. Let me see. Okay, your accounts, you reconcile this account. We are done now. We are done with the reconciliation. Now, we are done with the reconciliation. It is now bringing the window again. If we want to continue reconciliation for the next month, which is February, well, we are stopping at this point. Now, you have done your reconciliation, and you now want to generate your reports. Let's look at generation of reports now. Profit and loss, balance sheet, cash flow statement, and different ledger reports. There are a good number of reports you can generate on QuickBooks. A good number. If I come to this report section and I'll see 4 categories of reports: standard reports, custom reports, management report. Let's go. Our focus is standard reports. So I'll go to reports. So let's see how our balance sheet, our profit and loss, our cash flow looks like. So if I come here, I'll click on balance sheet, for instance, and I want to generate my balance sheet. So the first thing is to select your period. So this place is asking you from when to when. So this is from 1st of January 2025. 1st of January 2025 to 31st of December. We want to generate our balance sheet for 1 full year now. 31st of December 2025. December 31st. So this is how my balance sheet looks like. I can see my assets. I can see all my assets. I can see account receivables. This is my balance sheet. So I can export this to Excel. Can export it to Excel. How do you export to Excel? Just come to, where do I go? Where is that place again? Let me scroll. There's a place you can export to. Okay, come here. Export, click on export. Say export to Excel. It will export it to Excel. Let me open it. This is it here. Click here. And if I open with Excel, let me show you my window now so that that's exported to Excel. I'm opening it. Let me share my Excel screen. It's opening. So this is it here. I've exported it to Excel. This is it here. So this is my balance sheet to Excel. So same thing you can do. Let's generate one more report. You come to your reports. Let's go backward. Let's generate profit and loss reports. Just come here, click profit and loss. Profit and loss. You select your period from when to when. I want to select my period from January 1st, 2025. January 1st, 2025 to 31st of December 2025.
If we can't see your screen.
Okay, I'm coming. Okay, we might have to end this class here because my battery is down, but I generated the profit and loss report the same way, the same place I went to generate my balance sheet is where I'll generate my profit and loss. So this is it. My system will soon go off. Oh dear. So this is my profit and loss. This is how my profit and loss looks like. I'll now come export to Excel. It will go to Excel. Then I can now view it on Excel. I can open it from here. It will open it. So this is my profit and loss. Let me share with you. This is my profit and loss here. So this is just reporting. If you just go to that report section, you see different kinds of report. Just ensure you select the range. You might want to generate quarterly report. Just select 1st of January to 31st March, depending on what you want. Okay, ladies and gentlemen, we end at this point because my system is about to go off. So I'll entertain questions, but if for any reason we are not able to attend all the questions here, you can always drop a question for me in the group. But meanwhile, let me stop my recording. Let me stop my sharing. So meanwhile, let's entertain questions, please. If any. Questions, if any. Any question, if any?
Maybe I will utilize the WhatsApp group. For me, I had issue with network, so I can't really say for now. So maybe when I go through the video after dropping it, then I'll get back to you via the WhatsApp group.
Okay, that's fine.
Thank you, sir.
Okay, great.
Please, I have a question.
Okay, please, ma, go ahead.
Before you started the reconciliation, why did you have to add up the interest, and then you wrote out the figure, and then you added up the charges as well? You wrote out the figure. Why did you have to do that before starting the reconciliation?
Yeah, like I explained that when you are doing reconciliation, first is reconciliation is done on a monthly basis. You know, as you are posting transactions on your QuickBooks, you might not be privy to have your bank statement until the end of the month. So even if you have it at the end of the month, it is possible that you have a good number of bank charges, line item for bank charges that have been happening only within that January. So you need to post that bank charges too on your QuickBooks. You need to post it. But QuickBooks is saying instead of going line by line and post, just check through your bank statement. What are all the bank charges? Add them up and put them in that place. Now, when I put them in that place and I do same for interest, it has captured whatever happened as bank charges and interest for that month in your bank statement. It has done that because you are just in the office posting transactions. You don't have an idea of the bank charges that they are charging. Most of the time, you don't know what they will charge as transactions are happening. So you only do this at the end of the month, where most banks normally send monthly bank statement. You now take it, look at all the bank charges that have happened, add them up, irrespective of the type of charge. Just add it up. All of them will still be classified as bank charges. You add them up, put them in that box. Same for interest. You add them up, put them in that box. You need to do that because if you don't do that, you will still be having your reconciliation will not be complete, because normally there will be some bank charges that would have happened in that month that you have not captured on your QuickBooks, unless you are meticulous enough to be capturing every bank charge that happened in that month. Then you don't need to enter anything on that place. But if you are recording your QuickBooks and days are going, 31 days have exhausted, and you have not captured anything like bank charges, you have not been meticulous enough to be checking bank charges to record them, you need to do that. That's why.
Okay, thank you.
Okay, so I'll prefer any other questions to be dropped on the group so that I can end the call. If I see the questions, I'll definitely respond to them. Meanwhile, the recording for the class will be dropped before the end of today. So please feel free to ask your question on the group and equally leave a feedback for me with regards to today's class. Thank you very much. So I'll end the call for now. I'll end the class. Then further questions can be dropped on the group.